What's up, everybody? In today's video, we're going to be going over the home equity line of credit, aka the Heloc. I'll be breaking down exactly what a home equity line of credit is, how you can get one, the pros and cons of a home equity line of credit, how you can build massive wealth by using a home equity line of credit, and so much more. So make sure to stick around all the way to the end so you don't miss anything. And at the very end of this video, I'll actually be going over exactly how I was able to utilize a home equity line of credit to purchase a cash flowing duplex. If you're new to this channel, my name is Evan Phoenix, and this channel is all about real estate education and my journey to financial independence through real estate investing. So if that's something that you're interested in, please go down and subscribe below. Other than that, let's get right into it. Okay, so what does a Heloc stand for? A Heloc stands for a home equity line of credit. A simplified version is that it is a credit card that you can use with a limit that's based off of the equity in your home. For example, let's say you purchased a $250,000 home, you put down a down payment, and you've been paying the mortgage for a couple of years now. Now what's owed on the mortgage is $200,000. So you have $50,000 of home equity that you can access in form of pretty much a credit card, and you only get charged if you use it. So if you don't use it, it's nice to know that you have something that you can pull from in your back pocket. I personally have a home equity line of credit on one of my properties, and most commonly it's over 20 years. So the first 10 years of your home equity line of credit, you'll be paying interest only payments, while the second 10, it will be applied to the principal of what you borrowed. Unless you paid that off, of course. But just like a credit card, if you pull from the home equity line of credit and then pay it off, well, you're back to your original balance and you can reuse it for that first 10-year period. And with a home equity line of credit, you get charged interest on the money that you actually use. You have to be real careful when using a home equity line of credit, especially if you plan on using the money from the Heloc for more than a couple of years. I say that because the interest rate that you get charged on the money you pull from on the Heloc is actually based on the prime rate of the market. So let's say when you closed on your Heloc, it was about a 4.75% interest rate, and that's what you would be charged on the money you used from. At that point, you're at 4.75%, but as the prime rate fluctuates with the market, it may go higher, so you need to account for being able to pay for even more interest than you planned on originally. You don't want to be caught in a situation where you've used the whole limit of your Heloc and then it raises to 8, 9, 10% interest. Okay, now we're going to transition into the pros and the cons of a home equity line of credit. So first off, the cons of a Heloc. Like I just mentioned, it is an adjustable rate when it comes to the interest rate and the interest that's being charged on the money that you use from your Heloc. And like I said before, you don't want to be paying more interest than you accounted for and not being able to pay for it. Into the second con, which is, I know I said that it's like a credit card, but it's not a get it and forget it type of credit card. You only have this for about 10 years before you start paying off the principal. Now at that time, you always can reapply and get a new home equity line of credit, but it is shorter term, about 10 years. Okay, moving on to the last con that we'll be talking about with the home equity line of credit is that if you wanted to refinance the property that has the home equity line of credit, then you have to pay off the Heloc in entirety. Meaning you cannot refinance the property and leave the balance of which is owed on the home equity line of credit. You have to pay that off. So for someone that wanted to do a cash out refinance, it may not be worth it at that point because you have to pay off and use some of the proceeds you were going to receive to paying off your Heloc. Okay, let's go over quickly the benefits of a Heloc. Firstly, just pointing out the obvious, it's another resource of capital for you in case you either get into a pinch, you want to invest in something, or you want to purchase something. If you ever do get into a pinch, you can pull from that Heloc. I know personally that I feel very comfortable knowing that I have that just in case I need to pull from it. Next, once you get approved, you can use it whenever. It's just like a credit card. Like I said, there is a limit on the 10 years, but you can use it whenever, pay it off, only use some of it, or use all of it, whatever you like. You don't need anyone's permission. You don't need anyone to sign off on it. It's essentially yours for the taking. And the last benefit we'll be talking about is actually the low cost to get a home equity line of credit. Now, if you're getting a home equity line of credit on your primary residence, the great thing is a lot of banks will actually pay the majority of fees associated with getting your home equity line of credit. Also, with the cost that you do have to pay, you can even wrap that into your home equity line of credit if you wish at closing. So let's say all in all, you have to pay $1,500 to pull a Heloc. you could just add that to the balance of your HELOC. So now $1,500 is taken out of your home equity line of credit. You don't have to put any of your cash down, and you just get charged interest on that $1,500 and start your payment plan. And it's extremely affordable if you start comparing it to a traditional refinance or a cash out refinance. Now let's get into how to use a HELOC to build massive wealth. Now, it doesn't take a genius to understand that if you invest your home equity line of credit limit into something that gives you a great return on investment, then it is a win-win situation. I have a rule with spending money from my HELOC that I can only spend it on 3 things. The first is spending it on myself. Now, I know that's vague, but when I think about that, that means for education in a new skill, or spending it on myself, such as my property if it needs a new roof, and I can spend it on that, maybe increase the value by doing a couple bathrooms or something. So essentially spending it on myself that will have a return on its investment. The second thing is investing into your business. Now that's very straightforward. If you have a lawn care business and you need more tractors or you need more help, that's using the HELOC to pay for those costs. And essentially you'll be able to do more lawns and bring in more revenue to that business because you've invested your HELOC money into your business. And the third and final, which is exactly what I did, is use that HELOC to purchase a cash flowing rental property. Okay, now let's go over exactly how I was able to take my home equity line of credit and purchase this cash flowing duplex. So those that have been watching my videos know that I have a 4-unit apartment complex that I house hacked by only putting 3.5% down. By being able to put such low money on this property, I was able to use more proceeds that I had to put into the property and fix up and raise the value. So after I house hacked that 4-unit property and I fixed it up and raised the value, I was able to pull a home equity line of credit based off of the equity that I forced into that property. Now, once my wife and I closed on this home equity line of credit, it was time to then go search for a property. The one thing I'll say is if you use a commercial bank for a rental property, they're going to care less about your debt to income ratio and using that home equity line of credit than if you're going to use a conforming loan. So I was able to use my HELOC to purchase this duplex, and it cash flows about $400 a month, even after considering the monthly costs associated with pulling from my home equity line of credit. So essentially I got a free rental property because I was able to use the equity in one of my other properties. And now I have an additional $400 a month in cash flow every single month. Not only that, but I have my tenants paying down my mortgage in that property. I have appreciation because in that area, I see the values only going up. And it is a great win-win situation and a great return on investment by using my home equity line of credit to purchase something that'll make me money. If you want to learn more about how I was able to purchase that property with my home equity line of credit, you can click right here for that video and watch it to in its entirety. I go over every single step and actually the numbers as well, so you can check into that.